Hi there, Serial Trader here. Just want to do a quick update on the major US indices. And okay, so looking at the daily chart here of SPX, so the lows of Monday, they didn't quite hold on an intraday basis. They got tested here on Thursday, but you can see it's really not, it's not going down. That was basically just a stop running move, at least on SPX. At least that's what it appears to be so far. Now we're reversing back up. So I'll just move this C wave termination point over from Monday to Thursday for SPX. But remember in the last video, I was discussing the Nasdaq as being the most important thing to watch. And let me just go right over the Nasdaq right here. So here's the Nasdaq Composite. And the Nasdaq Composite's lows of Monday did hold on Thursday. So Monday's low was 10,519.49 and Thursday's low was 10,520.22. So just slightly above. So tested and held on the Nasdaq, reversed up nicely. Basically a double bottom. Okay, and let me just quickly go over to the Nasdaq futures where I actually have the position on from last time. And this is what I see on the futures. So the futures also held. So this is the Nasdaq 100 futures. So if you look at the NDX, the actual Nasdaq 100 cash index, it also held the lows of Monday, just like the composite did. So on the futures, I said in the last video, you can stay long against 10,656.5. I had my stop just below there. So when it's low on Thursday as 10,660.25. So the stop wasn't violated. Lows held, basically a double bottom. And now it looks like we're reversing nicely. So this corrective trend channel we've been in, we're starting to poke out of that. So that's a good sign here on the Nasdaq futures. As far as the wave count goes, I would still go with, okay, we had this ending diagonal 5 waves down for the C wave. That ended Monday. And since then, we've had an initial 1 up. Extremely deep retracement, almost 100% retracement, but not quite. So technically, as long as wave 2 doesn't go beyond the 100% retracement, doesn't take out the lows, it's still a valid wave 2. So as long as that remains, we can call this 1, 2, and then perhaps a smaller 1, 2, and now we have a little wave 3 of 3 in development. That's currently a reasonable interpretation. Obviously, if something changes and we do take out the lows, we're going to have to rethink this and rethink the trade. But currently, it's still intact. So going forward, if this is the right interpretation, we should have some strength coming in basically immediately here. And then eventually be looking to take out the old highs, being that this is an overall corrective pattern. So far so good. And I just want to emphasize, just like I did in the last video, the Nasdaq seems to be leading the market. So that means even though, like normally you'd think, going back here to SPX, oh, we just took out that reversal low, that's really bearish, we should short the break of that low. Well, maybe under more normal, or I'll say maybe under different circumstances that would be true. Taking out a reversal low like that would lead to some further weakness. But you can see it really didn't at all. And I think the reason for that is the real, the thing that's really moving the market, that's pulling everything around, it's the Nasdaq. So as long as the Nasdaq's lows held, which they did, SPX, modestly testing those lows and breaking them, it really meant nothing. And so far, that's been what's happened. It meant nothing. It didn't break down. And it'll be the same thing on the Dow when I go look at that later. But yeah, key message, just keep watching the Nasdaq. And in my case, that's what I'm actually positioning with, because it's the clearest thing. It's the one that's leading. So as long as the Nasdaq's pattern is intact, it's just going to pull the other indices along with it, even if they don't follow along perfectly. Like in that case, the other indices broke Monday's low slightly. Nasdaq didn't, and then they all just went up together afterwards. So just keep that in mind. At least for now, I'm not watching SPX as kind of the market barometer. I mean, it's important, but the Nasdaq is what's driving the action at the moment, in my opinion. So keep an eye on the Nasdaq. All right, so basically, bottom line, long against the lows, and our targets are going to be, eventually back to old highs. So we'll see how that goes. And you can see, this bullish divergence here just on the 4-hour RSI for the Nasdaq futures. That continues. So even though we came down, basically made a double bottom, again, a higher low in RSI. So that's just telling you that that downside pressure is just not there. And we got the result. It's reversing up again. Okay, I think that's pretty much all I want to go through here. You can see on the Nasdaq Composite, it's also breaking out this corrective trend channel. So that's good to see. And SPX, not quite there, but a little bit more strength, and we'll be getting out of the channel there as well. Again, doesn't really matter if the Nasdaq's going to do it and is doing it. SPX will follow. That's really the bottom line here. Okay, now we'll go over to the Thinkorswim candlestick chart. So SPX candlestick, so nice reversal day. Well, actually, you basically had a reversal day on Thursday. So even though you modestly took out the lows, you actually closed up. No downside follow through. So that was a little reversal there. And then a nice big green candle Friday. Closed fairly near the high of the candle. So that's a strong move. It would suggest follow through into Monday and next week. So let's see. And on the SPX Weekly, let's have a quick look here. So weekly, interesting. So we just had a nice reversal right up that 20-week simple moving average. Looks like a potential bullish hammer candlestick on the weekly. So that looks fairly bullish as far as the weekly candle goes. Okay, that's probably all that really needs to be said about SPX. And we'll go over to the Dow Jones Industrial Average. So the Dow, same idea. The Dow modestly took out the lows, but actually closed higher. So that was a nice reversal. And then I'd say confirmation on Friday here because we did a bullish engulfing candlestick on the Dow. So that's the most clear daily candle of the three indices, I would say, is we had a nice bullish engulfing candle on the Dow. So that suggests further strength. Good to see. Now, weekly candlestick on the Dow. Oh, interesting. So the Dow reversed off the 20-week and almost a 50-week simple moving average. So that's quite a nice technical pivot. And I guess you could potentially call this a weekly bullish hammer, but not the best looking one. Still looks fairly bullish with that long lower shadow there and reversing off those major weekly moving averages. And same message will be for the Dow. We're looking to take out the prior high up here eventually when this pattern gets fully retraced to the upside, as it suggests it will, being that it is corrective looking. Nice little ABC down on the Dow there, right? Okay, Nasdaq Composite. So Nasdaq Composite, yeah, same idea, ABC down. We're already back above the daily T line. Obviously, Monday's lows held on the Nasdaq. And that's the most important thing, I would say, since this is what's driving the market. And weekly candles on the Nasdaq. What do we got here? So it looks like we have a weekly, we'll call it a weekly piercing candle. So that's quite a bullish weekly candle. And I'll also add that the Nasdaq actually closed the week higher, unlike I believe the other two indices. So even though 4 weeks down technically on SPX and I believe the Dow as well, we've stopped the weekly decline. So 3 weeks down the Nasdaq, fourth week, we've now gone positive of this corrective move. So yeah, nice weekly piercing candle, and that's where you close at least up halfway or above the prior candle's real body after opening below. So that's a bullish looking weekly situation there. Okay, so that's really what needed to be said on the Nasdaq Composite. Now we'll go over to the VIX, and the VIX continues to suggest that you know, a big decline is just not in the cards here. You can see we've just been making on these spikes. Well, certainly this June spike, we made a significantly lower high in the VIX, and every little pop up on the VIX here has subsequently been weaker and made lower highs, and the VIX closed pretty weak there on Friday. So I'd say a declining to sideways VIX is overall bullish for the market, and that's what appears to be going on here. And on the VIX VVIX tool, also some things to point out. So we had a little VIX VVIX divergence. So right here, VIX made a little bit of a higher low at that point in time. VVIX made a lower low and also got below the red moving average. And then of course, we got above the blue moving average here on SPX. So we have a confirmed buy signal here using this tool. So things are looking pretty bullish going off of that, along with everything else. Now, I think I'm done here on the thinkorswim charts for the time being. So one thing to point out on the composite. Now, we definitely have an ABC down here, and that's for Nasdaq, SPX, DOW, nice three-wave ABC decline. And that suggests that once this pattern is done, and it appears to be done, being that we tested and held the lows on the Nasdaq, once it's done, we're going to retrace and make new all-time highs. But I also point out we could develop into something more complex and more time-consuming and potentially deeper. So there is a possibility that this is just ABC down for a larger WXY pattern, for instance, okay? And let me just drop the degree down here by 1 and get that down intermediate. So potentially just an ABC down for a W. You'd have an ABC up for a wave X, maybe back to this previous resistance level, the B wave of wave W. But even in this scenario, it would still suggest a little bit more upside before we'd be looking to roll over again. And then you'd have an ABC down for a wave Y to complete a larger WXY. So this isn't currently what I'm leaning on. I mean, it could happen. I guess if we get up here and we kind of stall around this previous resistance area and start rolling over again, and we don't have that kind of third wave price action we're looking for, then this will gain some ground as far as being the interpretation. But until that happens, all we have currently to deal with is a nice ABC down and a technical reversal after testing and holding the lows. So currently the expectation is for higher prices, and we'll just have to wait for there to be more data before we jump that, oh, we're going to have a more complex, deeper, time-consuming correction. It's a possibility, but right now there's no reason to suggest it. But just something to be aware of if we don't go as bullish as it appears we're about to. All right. I'll just change this all back. Delete this stuff. Yeah, that's probably good for now. Let's see what happens next week. Serial Trader signing off.